Thank you, and welcome everybody to How to Make Money in Government Contracting. I'll be your presenter for today, Jeff Wilson. As Yasmin mentioned, I stopped counting. About a 14-year CPA out of the state of Maryland, and as well as a certified fraud examiner and a financial planner. I've been working in the government space for about 12 years. I've done both sides as an agency as well as working in agency as well as federal contractor, working with federal contractors. And so I'm happy to share my expertise with you. Give me one moment. The header here. I can't move. There we go. To the next slide here. Bear with me a moment here. Okay. So as mentioned, a couple of awards. My practice primarily focuses on helping individuals that are just starting into government contracting. We assist individuals becoming understanding and becoming certified as 8As, as well as the full gamut of just starting and getting into government contracting. Primarily, we help those that are using QuickBooks Online and showing how to be government compliant or DCA compliant, and just making sure that people are really starting off on the right foot when they get to government contractors. My clients tend to range from $0 to 35 billion, and we're happy to say that we use all that information that we've learned over a period of time to help those just starting out in the government contracting space be more successful. So here's our objectives for today. This will definitely not be a preaching class. So if you have questions, feel free to ask or share those, and then Yasmin will kind of stop me a little bit to make sure we get those out. So today, what I want to talk about is first, as you start out government contracting, what do you need as it relates to accounting outputs? Like, how do you price yourself? How do you price your labor? We're going to go through a case study, an example of how to do that, and then we'll talk about what you need systematically in order to kind of really be successful as soon as you jump into government contracting. So I start every government contracting presentation with this. Why are we here? And we are all here to make money. If anyone isn't here to make money, this may not be the class for you. The first rule of investment, according to Warren Buffett, is the first rule is don't lose money. The second rule, don't forget rule number one. And that's so important in government contracting. And I'll tell you because government contracting is a place where you see a lot of businesses, small businesses, end up losing money. And they end up losing money because they don't have the right processes in place, systems, and they don't understand their own pricing, their own cost structure, their own entity. And a key thing is being able to understand how your entity is structured in order to determine what you can take, what deals you can take, and what you can't. A lot of times that I've seen with my clients over the years is that and the reason I'm even doing this class, because I see when we get a client, they typically have like three customers, right? They have three projects or three contracts, and maybe one of them is a really good contract and two of them are losers. And it's kind of hard to see based on their systems or how they priced it for them to actually identify those losers. So I'm hoping today we can kind of walk through that process of making sure you don't have any losers as you start your journey in government contracting. And so why do we have, people think that, like, well, you got the biggest client in the world. You have the United States government. How can anybody lose money? And it starts really with the contract type. What type of contracts are you getting? Typically in a small business space, if you're small, you may get a firm fixed price. If you're 8A, you may get a sole source, cost reimbursement, time and materials. You got all these different type of contract vehicles that are available that you can be awarded. But the problem with it is it's sort of like when you when you bid for these contracts, you need to be wary of the process by which you're getting them and how you're determining what you're going to build a government. So my favorite, which is everybody's favorite one, is firm fixed price. And I kind of call that the sugar of contracting. It's the easiest thing. It tastes real good going down, but if we're all being truthful, it's probably the worst thing you can ever put in your body. And firm fixed price is somewhat like that. It's great because if when you're first starting out in government contracting, it's easy. You know how much money that comes in. But the problem with it is that it doesn't put you as the owner through the process of understanding your costs. Most people just say, I've got a $200,000 contract and I'm paying somebody $100,000, something like that. Okay, we're going to make $80,000. That easy math. I call it back envelope math. And the problem with some of these is that you don't know exactly your cost. And so you don't know to negotiate higher or hey, if you really, really are going to make money on it. So there are some tough ones there. And so what I always tell people is that even though you may get a firm fixed price contract, you always want to treat it like some of the other ones we'll discuss, like cost reimbursement, which is basically cost contract is you incur a cost and you're going to give the government your cost and then you're going to bill based on that. And obviously time and materials, which is sort of a hybrid of cost reimbursement as well. And these other ones are just different types. IDIQ, meaning the government doesn't know how much they need, but you need to be ready for whenever they kind of ask for that. And then we have these other, not as much as popular, depending on the service-based industry, depending on the industry that you're in. There. And sorry, the Zoom is there. We go. So as I mentioned, uh, firm fixed price, cost reimbursement contracts, and time and materials are pretty much the basic ones that you'll see. Most people, when they start off in the commercial space, have time and materials contracts, and then they're introduced to the cost reimbursement side of contracts, and then those on the fixed price. So what I would always say is that uh, is always great in that diversity of having commercial sized businesses to be used to building your pricing based on time and materials, and then being able to kind of use that. Those that are really good at doing time and material contracts in the commercial space typically are more going to be more successful when it comes to the cost reimbursement type contracts as well as the fixed price contracts here because they know their cost. They know what it costs to be in business. And what that is going to be one of the most key things to actually know here. So, want to take a quick stop early on. Anybody here currently doing? How many people here are actually doing government contracting now, or are we just getting started? Can we, Yasmin, just take a look at that?
Yeah, sure. People can either raise their hands or post in the chat.
And I'll check out the chat here a bit. Just getting started. Great. Okay, great. One purchase order is nice. Okay, perfect. Great. Great, great, great feedback. Active. Yeah. Okay, great. Awesome, awesome, awesome. First contracts. Wait, we got a party here. Perfect. And so my question, and I won't wait for it, is do you know what it costs for you to be in business? That's going to be the key thing to being successful in government. It's not as much, it's definitely, the proposal process, but it's knowing what's your cost structure. And that comes into how your accounting system is designed and set up. I promise you, I've sat through enough accounting courses. I am not going to uh, give you guys an accounting lesson. But what I am going to help you understand is that the commercial accounting system is not going to be the same setup as what you're going to use in government contracting. And government contracting, believe it or not, and I think it's one of the best setups for any business to be successful if you're doing services. Meaning the requirement that they have for your accounting system is so in depth that it's you should be successful in commercial because of your government contracting business. And the reason is because government contractors are required to know their costs. The government requires you to know it. And if you don't know it, you typically lose. And so we'll talk about what your accounting system, what design you sort of need in order to how it needs to be set up to do that. What I'm going to share with you now is you will hear there you're going to hear some I guess this word is nomenclature, some jargon when you whenever you talk to anybody about accounting and government contracting. And I'm going to share some rules here as you all are just getting started. Rule number 1, more likely than not, you will not be able to use a generalist bookkeeper as you go into government contracting because this is such a specialized sport. You're going to need someone who understands government accounting, government contract accounting, or at least the setup. Or you're going to have two, one that knows a government contract accountant as well as a general ledger, a basic bookkeeper. You may have to use a little bit of both, maybe have the government person on call. And the reason for this is that the government has set up a process for you to be ready. And this checklist that you're seeing is called the SF 1408. It's the pre-award survey. It's basic of prospective contractors for government contracting. It's a list. It's about 2 to 3 parts, about 15 things that it requires, and it asks you about your accounting system. And what it's doing is helping you navigate the uh, the government contracting compliance arena by saying, hey, your accounting system needs to have all of these features in here. And so we'll start off with one of the most key important features of it is the proper segregation of direct costs from indirect costs. That sounds like the most blandest statement ever, and I'm going to give it to you in basic English. They just want to know, can you tell the difference between direct labor? How do they know? Is your accounting system set up to show your direct labor costs separate from your G&A and overhead costs? That's it. It's a very simplistic thing, but it's something that typically, if gap or normal commercial bookkeepers won't set your accounting system up to be able to do. But your accounting system, when you go into the government contracting space, really has to be set up that way. Another item that's really key, I won't go through the whole list. You need to be able to identify your direct costs from your by contract. So that's typically called what we call job costing. That's what government contractors really have to focus on. You have to know your profitability by project. And a lot of government contractors, what I've seen over the time is they make money overall, but they have a couple of bad contracts. And the reason for that is because their system isn't set up for them to kind of monitor contracts. So I would bet a lot of us here, we probably get a P&L from our bookkeepers, etc., but we may not get a P&L by project and looking at every project and its profitability and understanding, hey, is this project truly profitable or are we losing money here? And if we are losing money, what are some of the reasons here? So one of the things, take home item is go Google SF1408, either have your accountant look at it or you look at it and say, hey, do I have these features? Can I do these things here in my accounting system? And if you can't, you're not you while you're in the game of government contracting, you may not be ready, and you need to you want to get this in your system as soon as you want to get this in your organization as soon as possible. So in discussing this, it's about the design. Your accounting system has to be designed for a certain way. And you'll hear a couple of Google keywords to kind of Google. You'll hear CAS, CAS, right? Cost accounting standards is about that. That is some contracts are covered by CAS, meaning you have to follow the rules of CAS. CAS is just cost accounting, which is job costing. And then you have DCAA. They have their own set, which is pretty much the same. Their audit and their evaluations. These are the check boxes that you're looking to kind of say, hey, we took care of this and we took care of this. All of that is covered on the SF1408. So that's how you cover your basis there. And what that allows you to do once you have the accounting system designed is you can start planning out and understanding your pricing, your cost structure, and then start figuring out and forecasting what your margins are going to be. So I'll tell you, for those that are starting out, how many people are quick poll here, you can put it in the chat. How many people are using QuickBooks, and how many people are you maybe using Uninet, Deltech? What's accounting systems are we using right now for government contracting? Roz is in QuickBooks. Are we doing desktop or are we doing online? You could do QBO for online and QBD for desktop. Welcome everybody. Okay, desktop. Rosalind, I should have known you were using desktop. Okay. All right. So QuickBooks Desktop, QuickBooks Online, both of them you can use in the government contracting space, right? The difference is it's pretty much that QuickBooks Desktop, no, neither QuickBooks versions are out of the box going to check off everything that's related on the SF1408, right? So the current, neither one of them are going to do it. You're going to have a bit of an add-on to that. If you're on desktop, you're going to use probably iCat systems, which is a cheaper way. All these are cheaper ways to continue using QuickBooks without going to Deltech or Uninet. There's a QuickBooks desktop app called iCat, which will read your QuickBooks desktop system, and it'll do your indirect rates and give you your pricing and your wrap rate, which we'll talk about a little bit later. QuickBooks Online, you can use GovRates. That's the system, the company I CEO, that does pretty much the same thing in that space. Or you're going to go to the Uninet and Deltech, which are the industry stalwarts of the industry. The only thing about that, what I tell people is, there is a point of time where you do have to go to those systems. What we try to explain is, when does that happen, right? So you don't want to go to those systems prematurely. Here's why. With those systems, even if they're more cost effective at some point, the issue, what I would tell everyone about accounting systems is not about the system, isn't just about the system. It also comes with the accountant. So maybe a small government contractor, you can have a bookkeeper or a govcon expert bookkeeper. That's a lower rate, but the accountant or the CFO that you're going to need to run Uninet or Deltech, that's going to be two different pricing ranges. So what I say is, even when you change systems, you have to also be conscious of the cost that you're going to incur as it relates to the persons, right? The staffing, right? So you could go from, basically paying something between 35 or $25 an hour to some paying 65 or 85 an hour for your accounting, because that is kind of where that is. But like I mentioned, definitely you need a system, one of those four systems. QuickBooks Online is great. They're constantly getting better. QuickBooks Desktop is good too. They'll be sunsetting that. They won't be doing any future updates to it, but it's still available for those that want to use it. So uh, just know that from that perspective. And once again, the reason why you need all those is the job costing. And the job costing, just for an explanation, quick explanation, and we'll kind of get off the accounting system part of it, is you need to be able to tell the government, and you need to understand how much it costs, how much money you are spending on a project. And what that does means is how much direct labor is on a project, how much of your fringe, your health and benefits are being pooled, and pooled meaning that they're not being directly, for example, Jeff Wilson's healthcare is not going to automatically be on the Apex project. A portion of my healthcare will be, but not all of it, even though I'm 100% on that project. That is called job costing. And that's called the indirect method. And some people in QuickBooks, they tend to do the direct method, which is not actually correct for the purposes of government cost accounting, but that's what you that's that's uh that's the nature of that there. Any questions about accounting systems as we go here? Okay, I got one, Jackie. Um, Jackie, I'm biased. I will share that with you. I don't lie. So I will tell you I am biased to QuickBooks Online. I do have a conflict of interest there, but I'm telling you, but I'll explain it. I prefer QuickBooks Online from accounting system setup. Because one, I'm glad the other question came in. One is QuickBooks Online is obviously going to be the future of accounting as it relates to QuickBooks. So I'm not a desktop user. I used to do desktop about 8 years ago, and haven't done it in a long time. I have one client who's ridiculously large who is on desktop, but besides that, I'm not a fan of it. And the reason is, I think the reason they do that is because their accountant is in their office. But most of the time, your accountant doesn't come to your office anymore, and then having a desktop system just so it doesn't really make as much sense. I think that over the long period of time, for those who are the accountants that still do desktop, they'll make a lot of money because it won't be a lot of them. So your fees will literally go up eventually, just in scarcity. So that's why I'm partial to that. And obviously we have a system that's built for government govcon on online. Bookkeepers, you can go to find a pro advisor. If you're on QuickBooks, findaproadvisor.com, and you can enter in your zip code and you can find a government contracting based bookkeeper. Also, there is another company called Our Timesheet. And that's a DCA compliant timesheet system. And we all kind of in the government space, they list the accountants that work primarily on government contracting. So online, the only add-on is our system, Govy Rates. Actually, for the some of the question was, what are the online add-ons for QuickBooks to meet that stuff? Online QBO, it's Govy Rates. If it's desktop, it's ICAT systems. I think I covered. Yep. Yeah. Okay. I think I got all the questions there. And so of that, why are these things kind of so important? And we'll talk. I'm gonna brush a little bit up on this. Is yes, ICAT is the cost accounting. That's why you need sort of a different like ledger. Is that government contracting is cost accounting. You'll hear someone say GAAP, GAAP, generally accepted accounting principles. That is GAAP is what commercial entities use, and it is a portion of what government contractors use. But government contractors are really doing cost accounting. That is what's really happening, and that is a different boy. Cost accounting is a different beast. I would say that I'm a under 40 CPA, and I can tell you there ain't a lot of cost accountants around. So when I have that conversation, I'm a Bowie State grad. I got to go to my professors there that taught me accounting when I want to talk cost accounting, and that's what makes it even more tougher. Those are the headwinds we have, particularly in the accounting industry, where not only do we not have as many CPAs we're creating, we ain't creating. If we're creating maybe 10 CPAs a year, it's more than that, but I'll give you an example. If we were creating 10 CPAs a year, we're probably creating one cost accountant a year. It's just not a field that everyone loves. It's really tough. So if you find a good person in cost accountant, stick with them because there's not a lot there. But that's what you're doing. It's cost accounting. That is the difference between a QBO, what QuickBooks Online or QuickBooks Desktop do. They do GAAP accounting, and government contracting accounting is cost accounting. And so that cost accounting looks like this, right? So I want to make sure everybody understands there's segments in government contract accounting, and here are your segments: your direct costs, costs that are explicitly related to a contract. You can go from top to bottom, one sheet of paperwork, and end up in the same project. For example, what we do, Jeff works on the DEA project, and you can go see Jeff's timesheet on Monday through Friday. It says DEA. We have him on the contract. We see he got paid. We see his costs are on the DEA project in the general ledger. That is what compliance is in government contract accounting. That's what it is. What it also is that Jeff used his card and he bought pencils and ink for the printer. Even though Jeff's on the DEA project, that ink is going to get used by everybody in the office. So that cost should not be to the DEA project. That should be G&A, right? Or you can make an argument for overhead. Those two kind of get a little mushy sometimes. But that's what your government contract accounting, your cost accounting, that's what doesn't happen in QuickBooks, and that's why you sort of need that add-on from that perspective, is to be able to kind of separate those costs, your office costs, etc. Because the government wants to know those to say, okay, are you overcharging us? The government's trying to get the best price. Because if you think about it, and I love government contract accounting because it's like we're arguing with ourselves, right? We all want to get paid more, but then if I ask everybody, do y'all want y'all taxes to go up? Y'all all gonna say no, right? Anybody want a tax increase? No. So guess what? The government's like, we're trying to make sure you don't overpay. So it's kind of it's interesting how we fight against ourselves on that one. But that's what you're really looking for. That's that segment. And overhead costs are costs that can't be identified or related to just one project. Meaning it is a project cost, but you really can't say it's just this one project. Every project may use it, etc. So as a result, it's overhead. And unallowables, that is the key. That is the first one easy way of getting kicked out of government contracting is to not be able to identify your unallowable costs. Unallowable costs do not mean, I'm in tax season, forgive me, do not mean they're not tax deductible. It just means that when you're building your costs, the government says, do not add these costs in because we're not paying for it. We're not going to allow you to charge us for that. That means meals and entertainment from a tax perspective is deductible. But meals and entertainments with alcohol in it, unallowable. Can't use it. Guess what? Mortgage interest expense, deductible. Mortgage interest expense that you got in government contracting, unallowable. So the government wants to make sure that they're not being charged for anything that they don't support. And a part of that is marketing, by the way. Not business development, but marketing. So these are things that you have to have in your system and set up properly to do that. And so my next slide, I'm going to show you what that setup looks like. So here is a government on the left side, financial accounting. You're looking at a very normal P&L. It's got income, it's got expenses, and it got net income. How many people's P&L look that way? Look very similar to the one on the left. It makes sense. It's nothing wrong with it. It's just that it's a commercial GAAP profit and loss statement. On the right side here, you'll see this. This is a P&L from our system. Notice the segmentation of the system. Look how it's showing. It has direct income. Notice the cost of goods sold, and notice the direct labor, the direct cost, and it's breaking out to say, hey, here are our direct costs. Here is direct travel, fringe benefits. Notice that we're showing that the Social Security, Medicare cost, all of that is being separated. Notice the overhead being broken down, overhead expenses, overhead labor. Yes, they do need to be broken out. G&A expenses, G&A labor. That's how a government contracting P&L should look like. And at the bottom, you'll see the unallowables. Once again, if you look at a government contracting P&L and it doesn't have unallowables, it's almost the easiest thing to audit because you're just like, all right, it's over. It's just as quick as that. It's over. So this is the setup primarily on the right-hand side that you want. And if your bookkeeper is not able to kind of do this, you'll probably need to bring in some additional assistance to kind of help you figure this out. So, but one key thing before we move on, why is this so important? Because if you don't have this, you cannot There's no way you can understand your pricing if you don't have the right side of this P&L this way. There's no way you can do it. If you are really you're the CPA. Because there you gotta know this to be able to calculate your rates and know what you need to be able to charge the government. That's where your pricing comes from. It doesn't come from, hey, we pay Sally $80,000. That's $40 an hour, and then we got Social Security and Medicare. We're gonna do 8% of that, and then we know this. That's not how you do pricing. That's inaccurate pricing. You need this setup some way somehow, whether it's an add-on with QuickBooks Online or QuickBooks Desktop, but you're going to need this in order to kind of get that to identify your pricing. Any questions as we start right before we get to the good stuff of identifying pricing? Anything about these financial statements? Anybody have any questions there?
You can type out your questions in the chat box. Okay, doesn't seem to be. Oh, is it hard to transition to the format on the right?
It's that's a tough question, Sharice. Miss Wilson, I'm not sure. So it's not right, but you're asking, being a CPA and an expert in this, I would say it's not for me, absolutely, but it is for some gap accountants. It's almost like reading a different language. My son's in French and I can't read his homework. It's kind of like that. It's not hard. It's probably when we have clients that come in, it probably takes us about we do 3 years. We kind of adjust, so maybe about 2-3 days. And sometimes what our clients do, they run kind of two ledgers. They run this gap ledger for their understanding, and we may just have them in Govy rates and do it a different way. Um, so it's not hard. It can be done, and it shouldn't be too expensive. So I wouldn't say it's hard, but it's just a specialized sport, and specialization is what you're going to need if you're going to be successful in this space. Account for government contracting. You can go to findaproadvisor.com. That's for those that's on QuickBooks. Some of the unallowable cost, interest expense that's not related to a contract, specifically marketing. You probably should leave your home office deductions in out of that. Meals for me, I basically just move all my meals to unallawables for our clients because I don't look at receipts to see if they had alcohol on it. So to me, it's better safe than sorry. Take the tax deduction, but don't bill it to the government. That would be my recommendation. Save yourself a lot of time. Marketing, if it's not business development, but marketing is an unallowable cost. And there's probably some other ones, but that's pretty much the large portion of that. Oh yeah, so some of the unallowable costs is like food with alcohol in it. I like that. You're not going to do that. Let's say I had a line of credit, right? That's going to go in unallawables too. I, Rosalind, I do have a cheat sheet for it. If you email me or I'll post it and I'll post it for you. Thank you. You gave me some homework. I got a cheat sheet for you. Uh, yes, you can find a pricing consultant, but I would say this, right? A pricing consultant is helpful, but it's only helpful if you know your cost and you can present that to them. They're going to have to, I would say, get the expert bookkeeping expertise, and it's easier to do that because after a while, pricing is not really that hard. Once you know your rates, then you're just really talking about knowing how much you're going to pay for a person, right? So we'll do that. Yeah, if you guys follow me on LinkedIn, I'll post it. Give me about the end of the week. I'll post a cheat sheet for you on allowance. I need some homework to do, so I'll do that for you guys. And I'll get that to you, Miss Logan. So, but so I covered the things on unallowables. We're all catching the overhead expenses, overhead labor. Make sure you're picking that up. G&A expenses, G&A labor, the fringe benefits, that you need those items there. That has to be broken out that way. Okay. That's what you need to identify and determine your price. So those were all important because you need to determine what you're going to bill the government, determine your pricing. You need to know all your costs. That means you got to have all those costs pulled in a certain manner, and that's what we had just went over at the last slide. So I'm going to use some industry jargon here, guys, that you got to get ready for because you started. Because I remember when I started government contracting, man, they were hitting me with some words, right? The government contracting space is different. They got all types of real cute words to use and nice alphabets. And so I'm gonna make sure you guys know this. I love talking to government contractors because they're the biggest braggers I've ever seen. It's like, hey, I got $1 million contract and I got what's your fully burden rate with all this. So I'm gonna tell you the real bragging point. I'm gonna start off and tell you guys this. It's not about how large the contract is. I've seen so many people with large contracts make no money. The bragging point is what your margins are. Never forget that. It's about profit margin. But before you can get the profit margin, it all starts with your burden rates, right? Here's the jargon of this is based burden means it's a burden to have, right? And what burden means is fringe, pretty much, right? It's your hourly rate of who you have as an employee, and what it costs to even have them around. The burden of having an employee is benefits. The benefits. It's great to have an employee. The ancillary cost around it become a burden. So they came up with this great jargon on this. So the burden rate is your hourly rate plus the cost of your fringe, which in order to know that, you got to be able to calculate your fringe rate. And we'll do that in a case study here. And then you have your fully burden rate. Fully burden is the direct labor hour rate of the employee, the fringe rate, the overhead rate, and your G&A rate. Are we good on that? Somebody just raised their hand. And so to do that, to get those, like I said, you have to have your chart of account structure because guess what? If you notice in that last presentation, in the last slide, we had the sections for fringe benefits, overhead, and G&A rate. And we're going to pull that information from that P&L in order to calculate these rates. So here we're just talking about the P&L, and because I'm gonna go fast over this one, is the P&L is how you calculate your rates. It's the source of it. So remember that P&L on the left side with no cost categories, you're not gonna be able to calculate your rates. You can't do it. That's why GAAP and this cost accounting is two different worlds. And so you're gonna not only so you're gonna need your setup that way. And once you do that, and this is a cheat sheet, guys. So take this. These are the calculations you're going to need to kind of know your seven, your burden rate, right? Your fully burden rate, your wrap rate, your overhead rate, your G&A rate. You need to know these. Uh, got you, Tanya. I'll get back to you on that. I see it. And so these are your 7 keys. You need to know these to be successful. If you do not know these, you're in trouble. You got to know these. And if you have a CFO or accountant who can't help you get to these, then you're in the wrong place from a service standpoint. Okay? So I'm going to give you some of these rates and the calculations, so bear with me. They're not industry standards. I'm going to get to that one, Sharice. I do want to answer that. So here goes your calculation of your rates, how you do that. This is a quick and dirty. These rates can be more sophisticated, but here's how you would calculate your fringe rate, your G&A rate, your overhead rate, as well as your wrap rate. And remember, these computations are very easy. But the question is, most people do not have their GL set up to pull this all together, and that's why it sounds like it's rocket science, but it's not. It's all about the general ledger setup. And so we talked about these, and because of not the difficulties in pricing comes from the ability of not having a setup. So we'll go run through a quick scenario here on pricing and just run through it really quick. Sonia is a CEO of a cybersecurity company, been in business 10 years. She's got a contract valued at 140, 1 year contract. We see her cost. We have those pooled here. As you see here, the 37,000, the G&A costs, all of these things. Now, let's work through a quick one on how do we figure out her cost? Right? I given a detail. If you want to take a snapshot of this and work backwards through this on your own company, feel free to. So I'll leave it up here for a second, pause, and then we'll continue moving. And so first thing you got to do when determining your cost, you got to calculate your indirect rates, right? So they're going to ask you, what are your rates? What are your indirect rates, right? And so when people ask you what's your rate, you could say our wrap rate. That's typically what you want to say. People will ask you that. What's your rates? Well, we're at a wrap rate of 1.3, 1.2, 1.6, whatever that is. Uh, and so to calculate that, if you notice, everyone, I'm taking my direct labor costs, dividing it by my pool, which is G&A costs, and that's my percentage, 6%, 7% G&A rate. My fringe rate is 12.5, and my overhead is 31.1, and this is my indirect rates. Now, easy math. Oh, thank you. So easy math. You have, whenever you're calculating the rate, you got your pool and your base. Most of the times your base is always your direct labor. That's what you're seeing here. So I didn't put a division sign, but that's what's happening. I'm your pool, your base. I'm dividing that, and I'm getting 6.93. I'm dividing the total fringe cost, my pool, divided by my base, 120, getting my 12.5. Overhead, 37,000, dividing it, 31.1. That's all I'm doing. And if you recall from the doubling back for a second, right? Here was that calculation here. That's all we're doing. And that's how we get our rates. Now, quick thing, you're going to see this on 1 year, or is the calculation based on 1 year or for entire project? This calculation is based on a year. So you always base your rates. Typically, you base it on past or the current. It depends. But I would say in your purpose, you're doing this for the entire organization. So Irina, let me make sure I'm clear on that. Thanks for asking that because I want to be a point of clarity. These costs that are currently here for the entire organization. The only thing that is contract specific is this employee's salary. That's it. But the costs are are based on the organization. The pools are based on the organization's cost. So one key thing I want to make sure everyone knows here is like when you add these up, you'll see in the presentation you add all the rates up plus one. Just know you got to turn this into a decimal, by the way. So you got to do 6.93 divided by that. You got to turn it into a decimal, then add them up. Heads up. Okay. So here we don't do it. We didn't do it, but you turn this into a decimal. It's probably what 0.0693, 0.03, 0.31, and then the same thing here. You turn these all into decimals and you add a one, and that gives you the wrap rate of 1.5. The wrap rate is a multiplier that you multiply times that person's hourly rate. Okay. That's how, and what it represents, this wrap rate, this is what you got to know. So I'm going to stop here a bit. You need to know this because you need to know how much it costs per hour. That's what it represents. Every direct labor hour on that you incur needs an additional $1.50 on it, right? So that is kind of what that is doing there. It's a multiplier. And so, for example, this person's hourly rate was 57.69, right? If you do that wrap rate here, that 1.5, and if I, yep, 1.5, excuse me. Sorry about that. That's 57 times 1.5 means, hey, you're going to need to charge $86.54. That's when you add up all the cost that you need to pay for, right? Because that's what that wrap rate is. It's basically saying, and forgive me because I'm going to go back a bit. It's saying, hey, you incur typically all these costs in your business. So if you were to kind of combine all those, this is what needs to be added to every part of the person working in order to recoup the cost of running the business. Uh, it 1 second, Rosalind. What clarify that question for me, Rosalind? So that 1.504 is the total of the organization's cost, the G&A, the overhead, and the fringe. That means this is you got to pay for the person. That's the direct hourly rate, but you also got to pay for all this other stuff. And when you do that, you come up with which your wrap rate. So, Rosin, these rates are based on the organization's cost. We're not even we're off the person for a second. So just the okay, I got you. So Trisha, you calculate the 1.504 because you did. Let's run back real quick. First step, calculate your indirect rates. That means you got three rates to calculate: overhead, fringe, and G&A, right? And we know the way that you do that is divide your pool cost divided by your base, and your base is typically direct labor. So that's our rates. Let me know, everybody. Let me know. Right, step one. That is your first one. You got to know. You got to get your three rates. You got to get those first before you get to the wrap rate. Okay. And then so that's that part. Next is once you have those, you have your indirect rates. Now you got to add those up to get to your wrap rate. That's step two. In this, right, you can turn this into you need to turn these into a decimal point, right? So 6.93, 31.1, you can turn these into a decimal and then add those. That's how you can do that. And that's where you get the 1.504. Okay. Any questions there? Anything before we move?
Hi, Jeff. Just chiming in that we have 10 minutes
Gotcha.
left.
Yep. Right. So you turn the 6.93. I do it in Excel all the time. So you just, what do you divide that? You turn that into a decimal. You divide by 100. I do it in Excel. So me explaining it probably won't be too bad. But yeah, you just turn those into a decimal. Really, things divide by 100, but I may be off on that one. Turn those into a decimal point, and then you're adding those up. That's it. And then you got your wrap rate of 1.504. Uh, what's the difference calculating pool versus base? Well, you're calculating your pool are your G&A, overhead, and fringe costs. Your base is direct labor. Step three, right? So first step is identifying your indirect rates. Step two, right? Calculating your wrap rate. Step three is applying that wrap rate to yeah, there we go. Well, you did 1 second, Jackie. So step three is applying that rate to your labor. So in this case, the hourly cost rate is 57.69, right? We've calculated the rate. The wrap rate was 1.5. And the 1.5 represents the cost that were not included in paying this individual. And when you do that, you come up with the cost to pay this individual plus the cost for the company to keep this individual and the lights on equals 86.54. That's your fully burdened rate. That's what you use the wrap rate for. If you think about it, now we're going to talk a bit of business here. The business side is you as an organization have to recapture the cost of running the business and paying the person and making a profit, right? So this cost of hiring the person is 57.69. Your wrap rate, the cost of running the business, equals out to 86.54. Now, let's say, for example, in this case, the billable rate for this person ends up being $67.31 based on if this is just hypothetical, there's no calculation. I gave you guys that number. Then if you know that it's basically going to cost you $86.54 to build to for this person. The question is, should this person take this contract? And the answer will be no. 19 Thanks, Rosalind. There you go. No, that's how you're using the wrap rate. You're using it in a way that, hey, I know what it costs for me to do this contract. And now the government, if especially if you're doing fixed price, and we'll go back a bit, you guys already told me the contract's 140,000, or it's I know through my research it's going to be there. So now you really calculated all your costs and really have said, well, if this is 2,080 hour contract, hey, based on what it's going to cost me to do it, probably not a profitable thing unless I can find some way to get our rates down. This is what you need to know in order to be successful there. That's the thing. And what you can do, there's a lot of you can do this in Excel. You do need a general ledger setup. You do need to monitor it. You can do like I said, there's other systems. You in other systems that do it. This is our system and how we do it. And we just basically you key it all in and it basically calculates it for you. This is not what I tell people is not what you want to do. You ain't trying to do this all day. You're not trying to be an accountant, and you don't need to really pay some extraordinary pricing expert to basically do something that can be systematized and done pretty quickly. So that's how I would. That's what I got on the pricing and kind of how to do that. I walked you through the manual part, but yes, automation in QuickBooks, whether you use ICAT or you use GovRates, there's two systems out there that can allow you to basically calculate that. And then based on that, I'll note this because I did this the other day. We were bidding on a contract. Is knowing your pricing. The key thing is knowing what you price it to win. Always price it to win. I have a lot of people that they will price to lose. You got to be really careful with that. You want to make sure that you are pricing yourself in a way that if you feel like some people say, well, I'm just trying to get in the market or get in the game, and absolutely, Rosalind, you can use it for non-government contracts. It doesn't be. It's this whole methodology is really about pricing and costing. It's just something that generally a lot of bookkeepers or accountants or even CPAs or consultants don't do. And don't think about building the cost structure up that way. Uh, Price it to win, or price if you're pricing it. I would say if you're trying to get in, try to if you're going to take a loss, I would say don't take a loss. Price it to cost if you feel like that much competition. But I see too many people try to use pricing to lose to get into the game, and what can happen is you'll lose your shirt. Be careful on that. So I wouldn't recommend that. I would say make sure that you're pricing to win or price to cost, and kind of avoid loss leaders, as I call them. I would tell you that. So with that, any questions? Because we only got 3 minutes, and I want to make sure we get our questions out.
No, looks like you've done a great job answering the questions throughout the presentation. So kudos to you for keeping up with the demand of questions. And I know this ideally could probably be a workshop, but you know, we don't have time for that, unfortunately. Our webinars are really just to give an overview. So yeah, if people are interested in your services, do you want to tell them a little bit about what you offer?
Yeah, absolutely. So you all, it was great having you all here. I'm sorry. Uh, you can please contact me on LinkedIn. Keep me honest. I'm gonna get you guys an unallowable list. Uh, and for the unallowable list, I'll get that to get guys to you. I'll post that on LinkedIn. Like I said, I've been running the CPA firm for about 12, 13 years now, the W2 group, and as well as we created this add-on for QuickBooks Online in the government contracting space called GovRates, which basically once it maps to your accounting system, it'll just do it all. It does the calculations for you. It's no reason to become an accountant. And what we're seeing is just technology is making a lot of these things just much easier for us to do. So please go to GovRates on LinkedIn. Just say reminder, we want our unallowables list, and we will get that to you. I very appreciate you all hanging out with us today, and and thank you. And Yasmin for having me. I appreciate that.
No, thank you, Jeff. That was very thorough. And as I said, there's just never enough time. This was Jeff's first time teaching for us. So wave your hand if you think he did a great job. I think he did an excellent job, and we will definitely be bringing him back, but not at tax season again. As you reminded me before we started, is that Yasmin, this is tax season,
Oh
the
my gosh,
busiest time of his year. So I apologize for that. I still have to file my own taxes. Oh my goodness. Time's running out. But thank you, Jeff. Thank you,
thank you,
everybody, for
Yasmin.
your
Appreciate you, everybody.
fantastic questions. Obviously, connect with Jeff online and, you know, see if you can work with him or receive further information. And we will definitely be bringing him back later in the year. Thank you, everybody. And I'll be sending the recording out shortly. Thanks again.
Thank you, everybody.
Bye-bye.
Have a great one.
Bye-bye.